Good morning, everyone. Just give me a second while I get everything uploaded and get ready to get started. Just clicking through. This is the one true time where I literally fell asleep or overslept. I don't know if the sleep was good or if I just needed it, which is kind of funny. But uh, we're going to go ahead and get started in one quick second. And we'll go ahead and get rocking. I hope everybody's doing well. Uh, I'm down a little bit this morning. I think I'm down about $600 this morning, but one of my trades are holding on very steadily, and we'll see how that kind of plays out. Maybe we can be able to add on to that one and be able to control that position. Uh, and we're going to start from there. I'll be ready in about probably 1 minute. See, people inside of the comment section, people are going live. Make sure you send me a message saying, "Hey." Obviously, it would be nice to be able to see who's out there. I'm actually doing it a little bit later, obviously, but typically we used to start right around 8:30. I used to get a lot of people that was actually hopping in during the morning time. We got a lot of people from 7 o'clockers and 7:30 people, obviously, are heading to work already almost there. So maybe we can be able to catch a few people this morning. And you don't have to watch this on. You don't have to watch this pre-recorded. Today is the 19th. All right, here we go. Let's go ahead and get started. And we are live. This is Travis Witherspoon from Carter Cow Capital. Carter Cow Trading on Instagram. Trade with Travis on YouTube. Hope everybody's doing very well on this Monday morning. I'm going to look to be able to go out to vote today. Hopefully you are going to end up doing the same thing. This is also a teacher work day for me, so I got to put some grades together for my students and everything else like that. And obviously I have very good students, but now just got to show what they look like when it comes down to grades. Let's go ahead and get started with the disclaimer. Then after that, we'll look at the charts. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So showing myself on the overall screen, hopefully you can be able to see me here. I have a background, I have a black background today, going through and everything else. Obviously, it's a great Monday morning. Even if I'm down on the overall charts, it's always a great Monday morning. I'm alive, I'm breathing. I got my boys running inside of the room saying, "Hey, Daddy," and we get an opportunity to be able to trade. So that's always good. So what we're going to end up doing, like always, we're going to end up taking a look at the chart, see if there's any type of opportunity. And then after that, we're going to end up moving from there. Please be reminded, our boot camp this month is going to start from October 26th to October 30th. That's going to end up being starting next week. You can start being able to get your tickets now. I'm going to start being able to place out the overall links like always. And then after that, you have an opportunity of being able to get into there. This is the first month where I'm going to end up laying out so much stuff that I'm going to end up giving out that you're going to have an opportunity to be able to get a lot of stuff just in this overall boot camp. Remember, we end up talking about what is trading, how to be able to understanding terminology. We're going to talk about equity management, getting started with regulated and non-regulated brokers, talking about how you can be able to use other people's money, and also being able to give some overall trading strategies and tools and stuff like that. We have a couple people that are inside of the room that actually end up graduating from our boot camp and end up going into our masterclass. And so if you just don't want to hop into the masterclass, or you just want to go ahead and kind of get your toes wet and kind of figure out what you want to do for its overall trading, that is the way to be able to do it. Hop in, take advantage, and let's go ahead and get started with that. I love being able to teach people how to be able to do that. All right, so let's go ahead and get started with the overall charts. On the economic calendar today, it's going to end up being considered a trader's day, meaning that if we're looking at this, there's less high impact news when it comes down to the market, but it's just enough news to be able to know what's actually going on. Jerome Powell is going to end up speaking in about 10 minutes. I'm sorry, probably, yeah, he's going to end up speaking in about 10 minutes. And remember, when he talks, the market moves. We have to see what he's going to end up saying. It may end up being about stimulus checks. It may end up being about something like that. The U.S. dollar has been down early this morning. Has been down yesterday as well, even though looking at the overall positions, I do expect that the U.S. dollar is expected to be somewhat up. So we have to be able to pay attention to that. Also, we end up taking a look at it a little bit later on today. The European Central Bank President Lagarde is going to end up speaking as well. And then after that, the beaten minutes for the Australian dollar is going to end up being a little bit later on today. So we got to keep our eyes out on those pairs. We end up having a good example or a good opportunity to be able to know what's happening. So let's start off with the U.S. dollar index. If you're new, what we end up doing is this. We always start from the weekly, then we go to the daily, then after that we make a decision. From that decision, we end up figuring out what we're going to end up doing with other pairs before it's being able to get in and actually be able to trade them at this particular point in time. So U.S. dollar index, we're looking at this from the weekly. We see that this market is getting closer and closer to the sell zone. Even though that this market is considered to be bullish because it broke a trend line on this one yesterday, we're actually getting into a point to where this market may end up stagnating or may just automatically just turning around and looking to be able to sell on the weekly. Now, if it's looking to be able to sell on the weekly, we're talking about 3 to 4 months of overall bearish movement. The reason why I don't necessarily understand that movement, or the reason why I don't necessarily look at that, is because we're doing our election period. And obviously, you should see that the market should go up when it comes down to the U.S. dollar. You want the dollar to be strong before the election period and everything else. But right now, what we're looking at is, at least just starting off at the week, we end up having a dark cloud cover right here. We end up having a movement right here. The market never broke the actual low when the market broke out. Last week, it ended up having a very strong week. We're starting out today. Being down. So the weekly currently right now is expected to be bullish, but it's kind of holding on by a thread. We look at it from the daily. What we're looking at right here, the market remains to be the same, is a candlestick formation called a evening star. Now, evening star is a 3-bar candlestick based off of three, in this case, 3 consecutive days. If that happens, then the market is going to be bearish. If the market is going to end up being bearish based off of this movement, quite frankly, all of the stuff that I end up talking about for the U.S. dollar and basically buying is out of the window, which means that I won't be looking at being able to trade this overall pair unless I'm looking at trying to find selling opportunities. If there are some selling opportunities to be able to get into. Hopefully that makes sense for everyone. That's what I'm looking for at this particular point in time. I want to see how the market kind of reacts based off of that movement. Okay. And so with that being said, the market is expected to be bullish, but we have bearish undertones, and basically what it looks like, we have bearish action right now. So not going to end up making those movements. I actually tried to get into the market yesterday. The market didn't agree with what was happening, and obviously that's the reason why we see that more sellers are in the market instead of buyers when it comes down to the U.S. dollar index. So the U.S. dollar index is expected to be bullish, but right now we're looking at some bearish undertones. Okay, so we go from there. We look at the go there. We take a look at oil. Remember, oil has a huge correlation with the Canadian dollar. Currently, right now, remember the market went through a ascending triangle, broke down from that ascending triangle. So we had a breakout, we had a retest, and then after that, we started to have a breakout again, but it fell down in the same area as where that retest or where that original breakout ended up happening. It went back up and rejected off of that original area where it ended up rejecting again. So we're looking at consolidation. Now, keep this in mind. There's only 2 rules in consolidation. You only want to buy support. You only want to sell at resistance. Everything else does not matter. If you're in the middle of that, if you're in the middle of this overall box, that means that there's no trade to be taken. And quite frankly, you want to keep it that way because, quite frankly, if you end up taking a trade in this area, you have a better percentage of end up losing inside of the market. All right, so just explain that again. If we're looking at this overall area inside of here, we have a better chance of losing in the market if we trade in here. We have a very good chance of being able to make money if we were selling up here or we were buying right there. Now, whether if your position was selling or whether if your position was buying, you will actually still be in the money right now if you followed that 2 simple rules, okay? And actually follow the 3rd rule, which is most important, okay? Stay out of the market if it's not giving you a position from there. Okay, hopefully that makes sense for everyone. That's where we're at this particular point in time on this actual pair. Okay, so that's where we are. No trade to be taken. Market is sideways. If the market goes up to $41 a barrel and it remains to be at resistance, then I looked at taking a sale. If not, then I won't look at doing anything. Remember, retail sales are going to end up coming out from the Canadian dollar a little bit later on. Gold has the highest probability of success this week at 94%, or I'm sorry, 93%. And let me explain why. We actually ended up taking a buy on this one. If you was in our master class, you actually ended up getting a signal yesterday, right when it ended up happening, and obviously waking up to it and seeing that this market is doing very well. We go to the weekly on this overall trading pair. What we end up seeing is that this market is in the buy zone on a weekly, which means that we are looking at impending buys. The market's starting to get a little bit stronger. Remember, the market got all the way up to 2074 before dropping down. Right, that was about 5 or 6 weeks ago. Since then, the market has went back into the buy zone and has broken the trend line to the upside. With it breaking a trend line to the upside, I'm very interested in being able to buy long term. And being able to keep that in mind. Okay, with that being said, we go to the daily. From the daily, we can see that this market was in a triangle. It broke down bearish, and since then, the market has broken out bullish over here. I'm going to get rid of this right here. I'm going to get rid of, I'm going to keep this small little consolidated area. We can see that the market is falling in a consolidated area, but it has broken out. What we end up seeing was this market create a evening star. It went back, it retested, has not broken out of that overall level yet. But overall, if we're looking at this position, we can see that if the market remains to be above this purple trend line, we will see that this market will continue to keep on moving toward the upside. My overall expectation off of this first move is that this market is going to go to 1942, meaning that this is what we're looking at. And I'm going to erase this ABCD sequence, and I'm going to keep that one. What we're looking at is this. We expect that the market is going to go from A to B. Here was your low price. The low price ended up going up to the 786. From there, the market is expected to go all the way up to 1949. Now, let's be sure about that, because I want to make sure I'm saying that right. Because I had it at the deep 618. Let's see. Okay, so yeah, 786. So the market is expected to go up to 1949. I have 1942. Okay, that makes sense. For the overall position, currently the market right now has went past was at 1900. The low that I ended up seeing earlier this morning was 1899, and since then the market has moved from there. Now let's talk about the overall buy and why we end up getting in. If you look at this from a 2-hour perspective, we have the week. Think about this. We have the weekly saying bullish. We have the daily saying bullish. So we have trading alignment. The next thing we're looking for is that we're looking for a low price in the buy zone, right? We want to buy low prices in the buy zone. Very simply put, when it comes down to that, this market was creating a channel. Now, what I mean by channel, if we look at this overall position on the 2-hour, you would have seen that we had some consolidation support and consolidation resistance basically within this channel. It gave us a low price, gave us a high price, gave us a low price, gave us another high price, gave us a low price, gave us another high price. And what we were doing right now, or what we end up seeing, going into the market yesterday, was that we had an opportunity of being able to catch it at a very low buy price in this overall market, in a buy area in this overall market, which was right here. We said that as long as this market ended up touching this position without falling through in this overall area, which was right here, then we had an opportunity of being able to trade it from there. Okay. Plus the market was in the buy zone when that happened. So what our entry strategy was that we went to the 15-minute. From that 15-minute, we end up saying, when this market rejects and when this market touches, we want to get in on this overall buy as long as we end up having confirmation. Well, my confirmation wasn't necessarily directly at the bottom. My confirmation was being able to get in based off of this counter trend line break. I was able to get in at 1902. Wasn't necessarily the greatest number. I wish I could have got in right around the 1897 number. But at the same time, the market has pushed up bullish as we expected. The market went up. The market is up at 1912 at this particular point. So it gave us a very good entry when it comes down to this move. This is more of a breakout, so I believe that there will be a little bit of a retest move that we could see going down to the bottom, and it will give people an opportunity of being able to buy. Now, the one thing that I do like more than anything else is that because this is a Sunday trade, Sunday to Monday, because remember, Sunday to Monday trades are typically the ones that end up giving you the most push. We can see that we have a low trading volume right here to right here. So from 1912 to 1920, if this market keeps on pushing, it's going to go ahead and rise up very quickly to 1920. Once we do that, then we can go ahead and lock in our profits because we know that this market is probably not going to end up going back down. All right, now let's go back to what we know previously. We've seen that this market has went from support to resistance and everything else like that. We said that I take profit based off of the higher charts, and the 2-hour charts was expected to be at 1942, right, or right around that 1947 area. If you look at this movement and you see where this market has retraced down to from this ABCD sequence, it went A to B to C, went all the way down to 86. When the market retraced down to 86, the market is expected to go up to, once again, 1947. That's right around that 1942 area where we're looking at being able to get out. So we have a lot of correlations on why we should stay and remain in this trade. I expect that the market is going to end up doing this and keep on rising up and keep on rising up. Then after that, take us out when the market ends up hitting that overall position. Okay, so if you are in that position, once again, I would remain and I would stay intact on this overall position. This one has a potential for us giving, I'm just talking about myself in this case, right around $1,000 for this overall move if it keeps on moving the way that it's supposed to. Once again, not a bad trade at all. Obviously, my personal goal is to be able to get $1,000 a day when it comes down to trading. So if we could be able to do that and have that be a swing, and all I had to do is click on one button to be able to do that, then obviously that's going to be the move that I want to be able to get. Now, let's hop into the Nasdaq 100 real quick. And this one has been a thorn on my side this morning. Took a couple trades on this one, and both of them ended up rejecting. But currently right now, I know that Jerome Powell is about to start talking, so we probably should see what's happening with the market right now because, once again, once he talks, the market moves. So we have to keep that in mind. We take a look at what's going on. This market is considered to be bearish in my mind. And what I mean by bearish, we see that this market has created a bearish crown. This is a very high particular position. It's up at the deep 8.6 when the market is expected to fall. Now, once the market typically breaks a inner trend line, it will typically fall to an outer trend line, meaning that I expect that the market is going to end up falling right here, and it may end up finding support. If it finds support and it keeps on pushing up, then the market is going to move up to 12,911. If the market breaks this overall support and falls and turns that past support into future resistance, then the market will end up falling down at least to where this moving average is, I believe, which would be at 10,003. And if you keep that in mind, remember the point of control is back at that 11,350 area. So we have to look at that as the overall position. Currently, the market is not in the sell zone, and this market has not hit the sell zone as of yet. So we have to keep that in mind for its overall movement. And also, if we're looking at this overall pair, if we go to the 2-hour, we can see that this market is starting to fall from this original position where it was going up at. Now, overall, from a seller's position, we've seen that this market ended up breaking down very quickly on Friday. And quite frankly, if you had your eyes out on it on Friday, then you probably could have made about $1,000, maybe $2,000 based off of this overall move early. Me personally, I stopped looking at it after right around 3 o'clock, and the market actually moves at around 4. The market is actually currently moving right now at this particular point right now, and it's kind of making that evening start that we were talking about a little bit earlier. The high of this move ended up hitting right around 1963. We could expect that this market could push up a little bit more and go to the moving average of 1975. If that happens, then we have another high price to be able to get in and look to be able to sell down to the downside. But currently right now, we see a counter trend line that is actually forming on this original position. The high, we have an indecision candlestick. Typically, that means that we're going to see decision going in the market right now. Now, because Jerome Powell is speaking, we probably may end up seeing this market may make a quick move to the downside and then maybe a quick move to the upside, depending on how the market is actually going to react to that. But I see is also bouncing off of the 50-day moving average from this overall position as well. So I'm going to end up I'm going to end up remaining out of this overall pair. I've taken my opportunities to try to get in this actual market. The market is in the buy zone on a 15-minute. That's not a good thing to me either. I would like to see if I want to be able to get in. I would like to be able to see that either this market does two things. The first one would end up being if this market bounces up and stays below that overall swing high, and then after that rejects and then pushes back down. Right? If that happens, then I'm interested in being able to do that. Or better yet, if the market gets up to that 618 area where we expect that the market is going to go at 1957. But keep in mind, if the market keeps on pushing up, and it goes past 1952, then we're seeing no volume again, right? No trade volume when it comes down to that movement means that we have a pocket and we have a quick rush of overall movement where the market will not, where you can be confident that you can buy in this area and stay in this overall area, okay, for the overall trade. That's the first thing. The next thing will end up being, okay, well, if this market breaks to the downside and remains to the downside, we're sitting on a point of control, which is right around 11,920. My original trade earlier this morning was at 11,019. The market ended up giving me a chance to be able to make profit, but I was asleep because I ended up putting my stop loss at a position and went down to 11,906 and popped right back up to the upside and then went from there. That's why I took my loss at. But if we're looking at this overall position, what we can see is that we can see if this market remains to be bearish, we can see it retest based off of 11,928, and then after that start to move toward the downside. But once again, I would not consider this pair, not yet, until this market gets into the sell zone. We're not trying to sell low prices. We want to sell high prices in the sell zone. Okay, so keep that in mind. You can look at this on a 5-minute. The 5-minute may be a little bit higher on the actual chart for us being able to get in. We can see the counter trend line break. There's a definite break on this actual move. Okay, I'm not saying that if you end up taking the sale right now, you already took the sale based off of hitting the 2-hour moving average, that you'll be wrong. Quite frankly, you'll be up 15 points right now. I'm saying for me personally, because I'm looking at it right now, I'm not able to get into it right now at this particular position. I want to see this market kind of move a little bit higher. Don't break this overall high at 1963. If it doesn't break the overall high, then we have an opportunity of being able to trade it. If it does, then quite frankly, we shouldn't be in it in the first place. Okay. Now let's move on to the U.S. based pairs, and let's be able to go from there. And be able to get a chance. The two pairs that I was very much interested in was the Australian dollar, United States dollar, and I was looking at the Euro, United States dollar. End up taking a quick loss on this one as well yesterday. And once again, we're gonna talk about the reason why. It was basically a $80 loss this morning, or $80 loss yesterday. But once again, the biggest thing is I'm very happy about having an $80 loss compared to having a $300 loss. Let me explain why. And we take a look at the daily. This market ended up breaking the inner and outer trend line. We have a breakout right there. The market has not retested in this overall position, but it was showing signs of basically being broken and starting to fall down to starting to continue to fall down to the overall daily D extension at 6,800. Now, we look at this overall move. Currently, the market's at 33%. If the market keeps on falling down, then that means it's going to be in the buy zone. It's not going to give us an opportunity to be able to buy it at all. And this move will be wasted for its overall thought process because it only moved the first 4 days and never gave us the chance to be able to get back in. So we look at this from the 2-hour perspective. Empress, Faye, how you doing? Hope everything's going well with you. At the opening move of the chart at right around 6 o'clock, what we ended up seeing was the market ended up breaking a counter trend line to the downside. Once it broke that counter trend line to the downside, it was actually in the sell zone. So it gave us an opportunity and said that, hey, here's your opportunity to be able to trade. We just didn't get any momentum with everyone else trading at that particular position. So here's a quick hint when it comes down to trading and being able to understand and protect your positions. Anytime that you end up taking a trade, you automatically have 2 get out areas when you end up taking a trade, especially if you end up using counter trend trading. Okay. And I want you to understand this. The first position will end up being Your trading is based off of a counter trend line break. So once the counter trend line break happens, if the market moves above the counter trend line break off the next candlestick or the next two candlesticks, then that means that you're automatically out of the position, because that meant that the counter trend line break did not hold. The market did not respect the overall trend line. Okay, so that's the first get out area. So as soon as it pops its head above there, then you're automatically out. Now what you're doing is you're getting rid of a quick loss, right? But you're also saving yourself money, because if you did it based off of a swing trade, then that meant that your stop loss would have been way up here compared to being just right here at this overall position. The second position where you can be able to quickly get out if you end up missing that will end up being the fractal high. Well, if you look at these dots, the fractal high was up here. So if you would have stayed in this market, as soon as the market would have broke out of this position at this green line and touched that overall position, then that definitely told you that you should be out of the market. And that means that if you're out of the market right there, there's no trade to be able to take. If you remain to be in this trade, then you wanted to lose money, or you wanted to see how this market was going to end up playing out. But that's your two get out areas. For everyone else, we talk about that in the bootcamp class. If you're interested in being able to learn in the bootcamp class, go to cartercalcapital.com/start here so you can be able to learn some of that information. Once again, you're not going to win every trade. I don't win every trade, but the wins that I do have, I let them run. The losers that I have, I get rid of them very quickly, right? Get rid of them very quickly. You don't want to stay on to a loss, right? You have so many positions to where you can be able to get in, and there's 39 different, that's 40 different pairs. And out of those pairs, you can be able to get 40 of them wrong, right? Or 39 of them wrong. When you get into that one pair that's trading very well, then you can be able to maximize your position, right? I lost in 4 different positions this morning, but I'm winning on gold. And gold is basically pushing me up and putting me back into the profit, right? Now, I need to look at gold and possibly being able to add on if I possibly can. Okay, so we need to keep that in mind. Use that information to your advantage. All right, use that information to your advantage, everyone. Now, I'm still interested in being able to sell. Now, the only thing that I'm interested in being able to do is this. We see that this market this overall position had a little bit of support right there. And we can see that it was some support right here in this overall area. So I want to turn past support and the future resistance and see if the market is going to reject off of that 71.15 area. So we project this over. I'm not going to take a sale until the market ends up getting up to 71.57. Now the question is, should you buy it at this particular point? Well, if your plan was to sell it, then don't switch up your plan, right? Plan your trade your plan. Right? Allow this market to be able to go up and give you a high price. The market would definitely be in the sell zone. Take your sell right here. The small little pips that you end up losing before, if the market goes bearish, you can be able to gain back as the market goes back, and hopefully it breaks this overall position and gives you a better position of being able to make profit in the back end. Okay? Hopefully that makes sense for everyone, and being able to go from there. I got time for one more pair. Let's see. The next one that I want to take a look at is because the European Central Bank is going to talk a lot today. I want to take a look at what's going on with the euro dollar. We take a look at this on the weekly. This market is getting close to the buy zone. It's kind of looking like what's happening with gold. We have a movement to the downside, and if we look at it, we had the breakout. We're starting on the retest. The market never broke the actual high of the actual move, so this market is considered to be bearish still, right? But for people that are looking at being able to get in, you could say that there was a counter trend line break bullish, right? So the position on this one is actually undecided. And the way that I want you to understand this, because you can make a case of it being bullish, you can make a case of it being bearish. So anytime that we don't have a clear decision when it comes down to that overall move, I stand aside. I don't want to be able to get into the position and then be wrong just because I tried to guess. I don't want to guess. I want to sit up there and use everything that we put together and give us high probability trades. If we lose high probability trades, I'm okay with losing high probability trades, but I'm not willing to lose on a pair that I know for certain that I was wrong on taking the actual direction of that pair. For me, that does not make any sense. I'm not wasting my money when it comes down to that. Okay. All right. Most of trading is finding out reasons why not to take trades, not actually to take trades. I hope everybody understands that. You change your mentality from that. It makes it a little bit easier for you to be able to sleep at night when you're taking trades and you know that the market is actually moving. All right. So let's look at where we're at. We see that this market broke a trend line to the downside. It never completed the extension and then retraced. If we look at this upside move, we can see that upside move actually went to the 382. So that made the market healthy. So from a seller's perspective, this market was basically at an R2. From a buyer's perspective, this market is basically at an R2. Okay, well, what gives? Okay, what is the underlying move? The underlying move has been that the market has been bullish. We are in the sell zone off of this overall pair. We can see that this market ended up breaking the trend line bullish off of this move right here. And currently, this day has been more bullish activity. We're going into the buy zone off of this overall pair. So if the market gets into the buy zone off of this overall pair and we see more bullish activity, then this automatically flips from being bearish to bullish, right? And what you end up seeing on the US dollar index is that it will automatically flip from being bearish to bullish if we end up seeing that full evening star candlestick. Okay, so we have to keep that in mind. That also means that gold will keep on moving. So if gold will keep on moving up, then we keep on making money, and the money keeps on matriculating in from that position as well. Okay, so I want everybody to be able to understand that and know. All right, so you got to understand that there's correlations in the market, and you just have to play off of those correlations, right? And that's how you make your money, and being able to go from there. All right. So the question would be, do we take a buy on this position right now? The answer is no. You don't take a buy because you buy low in the buy zone. You buy low prices in the buy zone, right? Right now, we're not at a low price. We want to see how this market kind of reacts. We do have a counter trend line break bullish, right? That's a good thing. We do have, we could take a look at this pair and see that, well, we don't have a counter trend line break bullish. Let me explain that a little bit more. It goes our fractal high right here. Well, actually, that was our fractal high. So we did have a counter trend line break bullish. All right, it broke out, it retested right here. The market's starting to push back up. And you believe that the market is bullish, then you may end up wanting to take a trade on this one. But the market is not in the buy zone for me, and I would like to see how this market kind of moves within this point of control area. If this market remains to be above this point of control area, then going into tomorrow, then I'll look at a 2-hour move and see how the market's going to end up reacting. But we see that we have major volume start to push up in this overall area. This market has moved up right around 78 pips since 3 hours ago. So about right around that 2 o'clock time. Once again, so what we end up expecting, what we end up looking at is this. We want to see this market give a little bit of a drop off, give us the opportunity to be able to fall inside of the buy zone on the 2-hour, have a counter trend line break to be able to trade. And then after that, you got to trade right there, right? But at least we know when that happens that the market will be closer to the buy zone on the daily, which will give us that trading alignment if we want to switch our mindset from being bearish to bullish and being able to go from there. Okay. Now, as we go out, remember the only trade that we're in right now is the gold trade that we end up taking right here. We end up taking a loss on the Nasdaq 100. We end up taking a loss on the Australian dollar, United States dollar, but we end up taking short losses. This one is a long trade. We're going to expect to be in this trade until the market ends up hitting 1942. Currently, the market is moving very steadily in our overall position. CDC may supplement existing monetary system. Okay, we'll see how that kind of reacts. Remember, we have this low profile area right here from 1909 up to 1920. We're currently right there at that 1916 area. So we should see that this market could keep on pushing up very quickly. So I wouldn't chase the market right here. I'll allow the market to kind of fall just a little bit or have a little bit of resistance and be able to add on. You didn't catch it down here at the bottom, quite frankly. You didn't catch it right there at the bottom, quite frankly. I would kind of hold off a little bit, see if there's going to be a little bit of a drop. If you did, congratulations. Stay on that position. Allow this market to be able to move. Quite frankly, get out the way, right? Allow the market to be able to play out and be able to go from there. This market hits our overall position, then obviously we're in the money, and that would be great. Every other position, just let's see if we can find the overall opportunities throughout the day. If they show up, then we take them. If they don't show up, then we just stay out the way and we don't take a trade until we end up getting a position that we actually want. All right. Now, you like what we end up doing? Well, you want to hop and see how we end up doing it. First off, please share the video to somebody else that you think that would be interested in being able to learn how to be able to get this done. Okay. The second thing is please make sure that you end up going to cartercalcapital.com/start here. That's where you can be able to get hopped in for our free webinar. That's where you can be able to get hopped in for our bootcamp class. I'm going to place a link on the bootcamp class a little bit later on today. I'm going to have a video that's kind of dedicated for it. and being able to go from there. Remember, it's going to be from October 26th to October 30th. I really have a limited seating when it comes down to that. I like being able to teach small classes. So this is the time to be able to hop in and be able to go ahead and get your tickets now when it comes down to being able to do that. The sessions are basically $20 a day and being able to go from there. But once again, with the stuff that you're going to end up receiving, it's going to be well worth the overall time and investment and being able to get you started. Thank you for your time. I do apologize for being a little bit late, but hopefully we end up getting more people to be able to hop in. There was no comments today. So my guys in the comment sections and everybody else that's watching live, please make sure that you send some a little bit later on talking about what you thought about the positions. And like always, plan your trade your plan. I see each and every one of y'all tomorrow. Take it easy.